So let's call it like it is. Apple isn't the same company it was in the Steve Jobs era. Back then, it was a revolutionary idea company, products that made you gasp. Experiences that changed the way we live. Now the iPhone, the iPad, the MacBook, they weren't just devices. They were cultural phenomena. Fast forward to today, and Apple feels more like an accounting firm than an innovation engine. Every product launch is a spreadsheet. Exercise margins, services revenues, subscription growth, unit sales, projections. Innovation's taken a step back to the revenue optimization. Batteries, cameras, chip upgrades, you can go on and on. They're all nice, but they're predictable. And predictable doesn't excite people anymore. Apple has mastered the art of turning customer loyalty into a cash machine, but there's a cost. The world doesn't cheer at the next slightly faster iPhone anymore. The Jobs era, the magic, the bold, audacious, world-changing ideas has been replaced by carefully calculated moves designed to hit Wall Street expectations, not Main Street, awe and cheer like they used to be. If Apple wants to truly reclaim its throne as the world's most iconic tech brand, it needs to stop thinking like an accountant and start thinking more like a visionary. They have an event coming up very soon on September 9th. My next guest is going to have a lot of thoughts on this. Welcome Keith Fitz-Gerald to the show. Looking forward to this.
Thank you so much for having me back. It's great to see you.
So I know you talk tech a lot. I think you were early on in Palantir, like one of the first movers, I'm not mistaken. I know you were early on in Nvidia. I see you always talking tech. So I wanted to get your thoughts first on this Apple event. Is this going to be the new Jobs era momentum of new iconic innovation, or is it going to be iPhone sales or new innovation within iPhones? And on top of that, is that actually good for the stock, whether it's innovation or not?
Well, respectfully, I will push back against nearly every element of your introduction. And here's why. Apple is the kind of company now that is innovating behind the scenes. Historically, this is right out of their playbook. They are most dangerous when everybody writes them off. So what they do, this is exactly what they did before the iPhone. This is what they did before the iPad. This is what they did before they shifted away from the computer. When they introduced services, when they made their health pivot, you name it, what they do is they sit back and then they come in with a product that redefines the experience. I think what we're getting ready to see is something on that vein. It may not be this announcement, but very clearly they're positioning for it. They have 2.2 billion installed devices, Luke, around the world. That is the greatest single largest premium hardware expansion in the world in human history. They can change a few lines of code and add $1 billion or more to the top line. They've got $100 billion plus in free cash flow, have the largest buybacks, more cash on hand than many countries. And on top of all that, they're spinning forward into AI. They're spinning forward into use cases that the world hasn't even defined. So I would argue that Jobs' spirit is very much alive. Tim Cook is coy. That's exactly out of his playbook.
Well, let's talk about that cash, because that cash always interests me. Like, I feel like every time I look at the balance sheet every quarter, it's like up another $50 billion or $100 billion. I don't know exactly the number right now. I think it's in the hundreds of billions of dollars they have in cash right now, are earning probably 4% in money markets. So that's probably all, adding dollars by itself, just the interest on that. But that cash, are they going to invest that cash growing internally, or do you think an acquisition could be around the corner?
I think they're going to use it twofold, right? I think number one, I think there are very definitely several acquisitions in the fold. And, we don't know what those are. We don't know what it looks like because Apple's very good at camouflaging its next move. In fact, there are huge penalties for employees who do, and they don't remain employees of Apple very long when that happens. But the other thing that's happening that people, again, are not focused on because they just cannot, they have the patience of a mosquito, is the healthcare pivot. Apple is moving into devices that are going to make the world a better place. In fact, I think that whatever this next iteration is that they're cooking up 2, 3, 4, 5 cycles from now is going to get rid of many of the devices we take today for granted. So, we may not be using iPhones. We may have some other version of a device out there. It would be classic Apple to replace that.
So Nvidia, it would have been a smart decision to buy Nvidia 10 years back and roll it up into Apple, right? They really missed out on that one. But that's been kind of the name that we always talk about recently, is all the Nvidia, what's it doing? I'm very surprised that basically the earnings report last week was kind of almost a non-event. It didn't really move the market when everyone was paying attention to it. But since then, I think we're down maybe 5% or so off the tops from the stock. Where would you be putting new money to work in Nvidia? And what do you care about most when it comes to AI growth within Nvidia?
Well, yes, I will be putting new work to work. I have rented lips today, Luke. I will be putting new money to work all week if I have my plan together, my act together. It doesn't faze me to see the company at these prices because the company is moving forward. And the single most important variable is the roadmap. As long as AI demand continues to accelerate and continues to outpace AI production, that's simple math. That's simple economics. More demand, more supply, up we go with prices, earnings, et cetera, over time. Now, traders, again, this week is a holiday shortened week. There's a lot of fast money movers that are itching to take some profits. I don't really care. If we look forward at earnings, people always talk about valuation. Well, in 2022, they were 65x, but 2025 actuals came in at more like 12x. So yeah, if the market's a forward-looking equation, this is exactly what I want to see at the time I want to see it.
Well, I like playing the energy side. Like, you have this whole infrastructure build up and you need, the natural gases of the world, the nuclear energies, the transition between new energy and old energy. That's all a fun concept when you have all this AI demand. I mean, are you looking at energy at all? And where at specifically if you are looking within energy?
We are, but we're looking more, into traditional dinosaur juice right now for a while, dinosaur juice and natural gas. And we're doing that very deliberately because if you look at the rest of America, energy or not, it all comes down to permitting and zoning and not in my backyard syndrome. So restarting antiquated nuclear facilities, okay, maybe that's a starter, maybe it's not. But I think what we're really going to see is use of existing energy for quite some time to come while all that gets off the drawing board. So it's a continuum for us. At the opposite end of the spectrum, I'm invested privately in a fusion company called Zap Energy, which I think is going to move the needle because they're very, very close to reality.
Yep. I mean, fusion is a very interesting concept. I'm sure we could do a whole show on what the future of fusion technology looks like there. Keith, really appreciate you coming on today. I think you're here every week, so I'm sure you'll be back next week. Looking forward to it.
Thanks, Luke. Appreciate it.